Let's also welcome on board Nilesh Shah from Kotak AMC. Nilesh, hi, good morning. How should one approach the market in the midst of all this gloom and doom? Nifty has turned negative for the year. One knows that already. But do you sense that there's more pain coming?
It's always difficult to figure out in the short term where the markets will go. But clearly, when valuations are in your favor, it makes sense to buy. Buying in today's market scenario will be like catching a falling knife. So don't bite more than what you can chew. But our recommendation to the investors is to take one step ahead in risk as markets have become more cheap from a valuation point of view. While the Nifty continues to remain within 10% distance of its all-time high, there is a sharp polarization between super large caps, between large caps, between mid caps and small caps. The Nifty 35, which takes out 15 top performing stocks of Nifty, is probably trading at 8,500 to 9,000 Nifty, even though broad market is trading at a much higher level. The small cap and mid cap is even at a further correction, further discount. So this is the market to catch the falling knife. If you can't bear the volatility, this is not the time for you to invest. But if you want to make money and you can bear the volatility, this is the time to be a disciplined investor.
Sure. Nilesh, markets saw some hope of relief on the FPI surcharge tax on Friday. Could this be enough for building the trust deficit with foreign investors? And could we see a return of flows if something conclusive comes out?
If you want to bring foreign investors into the country, you have to give them respect. Respect for capital will always attract investors. Now, one way to demonstrate that is withdrawal of FPI surcharge, because that's pushing our taxation rate out of sync with other peers. The second way to do is to roll out a red carpet. Today, we have a scenario where FIIs, FPIs come to India to register. Why not create a license to invest for certain James Bond equivalent marquee investors? There are sovereign funds, there are marquee investors in endowment space, in family office space. We can create a list of them and go out to them saying that here is license to invest in India. We respect your capital. We know it's coming from a very good source. We know it is long term. And we give you license to invest in India at your convenience. So this also can increase FPI's confidence.
Nilesh, could we expect more disruption for debt MFs, Z stake sale fetch lower than anticipated? DHFL resolution might be delayed due to legal hurdles.
If we look at the debt mutual funds, despite all the problems which you have talked about, the 3-year return of debt mutual fund is higher than the fixed deposits. Now, over last 1 year, there has been many cases where some mutual funds have lost money. However, over next 6 to 8 months, we will see many of them getting resolved. For example, in one of the infrastructure company, escrowed cash flow were stopped, but now that is being released. So there is going to be recovery. While the rating was downgraded to D and we had to provide 75 to 100% write-downs, now there is actual recovery. In case of Z, we believe there is positive development. We haven't yet seen the cash, but the intention is undoubtedly and unmistakably clear. Those monies will also start coming into the fund. This will again improve for those people who have marked down the valuation. In case of Diwan Housing Finance Limited, also there is resolution possibility coming by. Mutual funds have already marked down 75 to 100% over there. I don't think so. Actual losses are likely to be in that range, so there will be recovery over there. Over last 6 to 12 months, we have seen many downgrades resulting into markdowns. Over next 6 to 12 months, I am seeing many actual recoveries happening, resulting into markups in the NAV. The whole sentiment can turn around once people see that a default or a downgrade does not necessarily mean loss of capital. it just means deferment of capital.
Any pockets that have surprised you on the up or the downside?
There are very few companies which have given positive surprise on the expectations. However, optically, we see profit growth coming in corporate-focused public as well as private sector banks, in pharmaceutical companies, and in some of the chemicals and specialty chemical companies. There could be surprise in the telecom sector over next year or so. As of today, all these companies are declaring huge losses, and that has really hurt the entire sector. Going forward, if there is a pricing discipline, these sectors can swing from huge losses to probably marginal profitability in a quick time. So there is profit growth coming on optical side from corporate focused public and private sector banks, from pharmaceutical industry, and hopefully they'll be joined by telecom industry over a period of time.
Nilesh, the market is expecting a 25 basis point rate cut. What's your expectation? Do you think the market will be disappointed with just 25 basis points?
Today we have two kinds of market which are expecting rate cuts based on the accommodative stance announced by the RBI. The debt market, as you correctly mentioned, is looking at 25 basis point. The equity market is looking at higher level. More than the quantum of rate cut, it is the direction of rate movement which will be important for the market. And it's not just the rate movement alone, but it also assurance on liquidity and transmission of liquidity, which can create permanent credit, will be what is watched out by the market. So a lower rate cut but with better liquidity and better transmission will be pretty fine with the market. A lower rate cut with no assurance on liquidity and no assurance on transmission will be negative for the market. A higher rate cut with assurance of abundant liquidity and with support for maximum transmission will be very positive for the market.
Nilesh, thanks so much for joining us this morning. Good to have you with us and sharing your views.